Dear students, today we are starting the adjusting entries. In the previous lectures, we have discussed some of the adjusting entries that was related to the depreciation or that was related to the provision for bad debts. Today we will discuss the concept of the accrued expenses or the prepaid expenses. Okay. So first of all, we should understand the meaning of the expenses. What is the meaning of the expenses? Expenses is what? Any money or any amount the business is paying. Why? Because they want to earn the profit. To earn the profit, the business is paying something, so that would be considered as the expense. So prepaid expenses and accrued expenses, what is the purpose of that? See, first of all, we have to understand the meaning of the adjusting entry, that if the financial year is ending, okay, for example, in some of the countries, the financial year is ending on the 31st December. In some of the countries, it is ending on 30th of the June, or in some of the businesses or in countries, they are following like 30th of September. So any time, the 12-month time period when it is ending for the financial, that will be considered as the financial year ending. Now, when the financial year is ending, what the business has to do? They have to prepare their financial statements. Now, while preparing the financial statement, there are some transactions which are not completed or which have an effect on more than 1 year. In that case, what we have to do, we need to adjust those things, okay? And for those adjustments, what we need the adjusting entries. For example, the first thing is what? That is the accrued expenses. It is simply, accrued expenses is what? Is the expenses payable. So what is the accrued expenses? The expenses payable. Okay. I just give you a simple example. Let's say that the financial year is ending on the 31st of December 2020. Now, expense payable, for example, we just take an example of the electric bill. The electric bill, or it may be a salary. Now, the expense of December 2020, but it will be paid in January 2022. Why? Because you are consuming the electricity the whole month. Okay. Now the year is ending on the 31st December, but still you haven't received the bill from the electric company that you have to pay, but they have not completed it. They have not counted it, that how many units are consumed during the month of the December. So they will calculate it in the next month, meaning the month of the January. But now you know that what is the bill. They may be sent you the bill and the date is, let's say, 10th of the January. But that is the expense of December. So the expense is for the year 2021. But it is paid in which year? It is paid in the 2022. So this is the transaction which has an effect on more than 1 year. That's why it is called as the adjusting entry. So what we have to do, first of all, we have to see that how much is the total expense of the electricity. Let's say the total expense is $1,050. Now, on 31st December, you have consumed the electricity. It is the expense of the December or the year 2021, but it is not still paid. So what we have to do on the 31st of December, it is the expense. Which expense? Electric expense will be debit, because the expenses are always debit. Increase is there, so it is how much? That is 100,050. Now, and then electric expense payable. 1050. So here the relation will be accrued expenses recorded. Mean this is the expense of 2021. The month is the December, but you have not still paid. So you have received the services, you have consumed the electricity in the month, but you are not paying this electricity in the same month. The bill is not paid in the same month, so you have to pay in the next month. So that will be payable at the end of the year. So it should be shown in the statement of financial position as the payable, and also in the income statement or in the profit and loss account as the expense of 2021. Now, after 10 days, 12 days, 13 days, but in the next year, now here the financial year is completed, this expense will be written in the profit and loss account, or what we call a income statement. So in the income statement, they will write expense, the electricity expense of 1050, and then electricity expense payable. So that is what? That is the liability of the business. So that will be recorded where? That will be recorded in the, what we say, the balance sheet. Okay, or what we say, the statement of financial position, and that amount is where written it in the payable, means in the liability, and obviously it is a current liability. Why current liability? Because you have to pay it within the 10, 15, 20 days in the next month. So it is a current liability of the business. So it will be recorded as the current liability. So this adjusting entry has a two effect. First effect in the profit and loss account or the income statement as an expense. Okay. And the second effect on the balance sheet or statement of financial position. So the expense account is debited, profit and loss account is debited, or income statement is written as expense, and the second effect on the statement of financial position as a payable, the liability, the current liability. So these are the two effects. Now let's say this liability is paid in the next year, in the next month, so in the next financial period. Now 1050 is the total amount, so it will be paid in the next month. So let's say it is on the 12th of the January, but 2021, the amount is paid, the payable or the liability is paid. So what we'll do, electric expense payable is debit by 1050, and cash or bank account is credit by 1050. So bill of December paid. So here they are paying the bill, but this bill is not the expense of the current month or the current year. This is the expense of the previous year. So that's why they are just paying the liability which was due on the last year, which was in the statement of financial position as a current liability. So now they are just paying the liability. So these are the two things that they are. This is a transaction, this is the expense of the previous year, like a 2020, but this is paid in 2021, so it has a effect on 2 years. So first effect when you are writing as a payable, and the second effect when you are writing as a paid. So there are so many other examples are there. For example, salary may be the next example. What is the salary? Means you have a workers, you are paying them all the month of the December, they will work for you. You will record their number of hours, or it is a fixed amount that you are paying, and you know at the end of the month, for example, you have to pay 100, 200, 500, whatsoever is the amount. So, but that December salary will be paid in the month of the January, because the rules normally say that the month salary will be paid in the next month, like from 5 to 10 on the next month. So in the next 10 days in the January, you have to pay the salary of the December. So the same transaction will be there. Instead of here electricity expense, we will write the salaries expense, and here salary expense payable. And then after 5 days, 10 days, 15 days, as per the agreement with the workers or the labor, when you are paying the salary, so that payable will be debit and cash or the bank account will be credit. So any other expense where you have received the services but still you have not paid the amount, or you have still not able to pay the amount due to any other reason, so that's why it is called as the accrued expense or simply the expenses payable. So this is how it is written in the books of the account. So expenses debit at the end of the year, it is written as a payable, and then in the next financial year when you are paying, simply the payable will be debit and the cash account or the bank account will be credit. Now here payable is a liability and here this liability is paid, the balance will be nil. So this is the first transaction in the adjustments related to the accrued expenses or expenses payable, how this is recorded. I hope you have understood the concept, and if you have still any doubt, you can ask me in the comments. Thank you.